In this episode, my friend Colin and I discuss his experience over the last 5 years practicing the infinite banking concept. We had fun and hope you enjoyed listening. Thank you. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm as pleased as I can be today to have my friend on as a guest. This is Colin Goozey. We've known each other for about 5 years. He's a friend, he's a client, and an all-around great guy. And he's
awesome.
Graciously, accepted the invitation to be a guest. So, Colin, thank you very much for, taking the time out to spend some time with us and tell us who you are, what you do, how we met, and, get your perspective on the infinite banking concept. And just share with us, Colin.
Well, it was the Self-Reliance Expo at the Convention Center in Houston. And I thought I was just going to look at, bomb shelters and stuff. But it was just some weird, thing I was going there to see. I mean, I was curious. And, they were going to show you how to put on a splint and all the other kind of stuff. And there was this guy over there making a presentation that was just basically about insurance. And there was just something something about it.
He was probably good looking, well spoken, right?
Yeah. Okay. Yeah. But the thing is, there was something you were saying as I was walking by that kind of like drew me over there. It was more a matter of look. I'm getting older now. Been getting older, and I was thinking to myself, well, how do you maintain and keep your money out of pretty much the trap of a 401k, right? I'd seen that it was that year after year they made the changes to it, and and they were getting closer and closer to just closing in on it. And people that felt so good about it, and I'd known a lot of people. They were very conventional 401k people. I worked at AT&T. Started out, it was a Bell system in 1980. This was in the LA area. Worked in downtown LA before it was, I don't know. But what it is, I was around all the conventional thinkers that you could ever put in one place. They were all conventional thinkers. And I was a conventional thinker, and the idea that you get some kind of like write-off for now by putting money in, ooh, that's good. It really wasn't that good. It really wasn't. It wasn't until years later. I'd been with, they shuffled everybody around in 1984. They put me in AT&T, based in Basking Ridge, New Jersey. The old entity, not the new entity.
From LA to New Jersey?
Well, no, I didn't go to New Jersey. However,
okay,
we were out in California in the LA area where I worked. We were invaded by people from the Northeast. And I don't mean that as a bad thing. They really were. They were fun. They were different. They were really strange. Some were scary. But when the scary people were on your side, it was like being able to tell people, hey, I'll send Paulie over here and he'll talk to you. You talk to him, you tell him. Oh, no. So it was like being in the mafia. It was like a phone company mafia. It's like, you just don't, it was kind of awesome. And they were very effective at what they were doing, and they were very focused. And some of them told me things that didn't quite, this was almost 20 years in to working there. I was in close to 40. At the time you start hearing different things like, why the hell are you going to do that? If you do that, well, you'll get screwed because this will happen. And they knew everything there was to know about, taxes and capital gains and all the other things like that. They had an awareness that I just didn't have. So I owe them something. I really do. I owe them something. Anyway, so after spending a couple of years training under those guys, I got a little more cynical about the conventional thought. And, I started looking for other things. And when I was young, I was 22 years old, I got talked out of a whole life policy. And I had never really studied up on that or really understood it. All I knew is all the experts says, don't do it.
So you were going to buy it or you had one when they talked you out of it?
I was looking into it,
okay,
but dropped the idea totally simply because they said, the experts said, oh, no, you can make so much more in an investment over here and things like that. And every time you made an investment with them, somehow your money was trapped with them.
Wow. Yeah. So you were 22 considering looking at whole life insurance, and all the experts said, oh, don't do that. And so you didn't, right?
Didn't.
Yeah.
And I realized later on, of course, everybody's got some regret.
Sure. But then, did you start a 401k back then, or did you just not do, the life insurance?
Oh, I put, I was doing the 401k, of course. Everybody at the phone company was doing the 401k.
Right.
And everybody at the phone company seemed like, they're all close to retiring. They seemed like they got their stuff together. But really, they were just people with better habits, not necessarily money. They had not necessarily studied money.
So they didn't get rich in their 401ks. They just had habits of saving money.
No, they did not.
All right.
So anyway, well, as things went by, I was always the low seniority guy. That's the way it worked in AT&T in the day, because everything was about seniority, and these people just kept going and going like Galapagos tortoises.
Right.
You just had to wait until one of them died. Hey, what about Bob? Bob, the guy who looks like a mummy. Yeah. Why is he still there? Because everybody wanted to go there. How do you have like 19 years in, and you'll never get in because the guy with 36 years wants to replace the guy who's got 40 years.
Right.
There's no point. Anyway, again, I was playing their game, and I should have took charge of my own. And that's the thing about this, is that you just feel like you're in charge of your own, and somebody else doesn't have the last word on what you do or how you do it. Very different. Anyway, it was the day I saw you there at the convention center. I got the copy of the book there from
Becoming Your Own
Nelson
Banker.
Nash.
Yep, Nelson. Yeah,
yep.
Yeah.
And somehow it just caught my attention. I read it till the pages were like getting all dog-eared. They were just kidding. It was a real mind breakthrough, and that was by the time I'd gotten to see Nelson Nash in person. I always sat in the front row with my eyes like this.
Yeah, I remember. I don't remember exactly how many times you had seen him, but I know that you've been to many events that we've held. Do you know how many times you attended?
I saw Nelson 3 times.
3 times.
And I was at a couple other events where Nelson wasn't there. You were the presenter at a real estate conference. Okay. Now, the thing was, it was at the real estate conference that you mentioned something, and it kind of like was like lightning hitting my brain there.
And I love that. I wish I could do that on command.
You had, yeah, there you go. You had a couple guests there, if it was the right time. A couple guests there. They were a younger couple. They owned a business. Okay, and they were asking about you were telling them about how to arrange that you can recover costs from things, and that the guy mentioned taxes. Well, damn, taxes are another part of your regular expense. It's a part of your life. It's a cost you can recover. Oh, crap. And you told them, well, you start a custodial account over here, and it's paid out of there, and you pay your estimated payments. What? And, I just, it blew me away. The thing Nelson told me the first time I'd seen him was you could use the money, you can internally finance all your major purchases and things like that. But it wasn't until you were talking with the younger couple that owned a business that it struck me that, wait a minute, you could internally finance every ordinary expense. It doesn't have to be a capital expense, like you're not leasing equipment, it doesn't have to be an investment. You don't have to grab money. And, the only way people know about investing money is you grab all this money, you get this giant wad of money that you had, and you pay it all. I just bought some gold. And why are you happy about that? You could have borrowed the money in that same amount, bought that same amount of gold, paid that back with payments of the cash you had in hand, and in the end, you're lowering the cost basis of the gold you bought, right?
And you wind up with both. Most people don't understand that to make a purchase, I don't care what it is, you've got to have capital. Well, that's so elementary, we jump over that. Okay, well, if you don't have your own capital, then you're beholden to the third-party lender, and you've got to jump through their hoops to have access to their capital, right? Because they're gatekeepers. So I don't walk people through. I say this often. I'm like, look, for you to make a cash purchase, you have to have saved up cash, right? Or suddenly come into a bunch of cash. All right. Yes. And most of us don't suddenly come into a bunch of cash. So we have to save up cash to make a cash purchase. And then we have to save up cash again to make a cash purchase. And so if we play a word game and just change the name of the cash flows for a minute, and I know words have power, absolutely. So if I'm saving money to make a cash purchase, can I take that cash flow and make it a premium and pay a premium, and then I'm going to accumulate cash?
Yes.
And then instead of withdrawing the cash from a savings account to make a purchase, can I just collateralize a cash value and now create a loan repayment?
Yes.
I mean, that's very simple, right? It's very easy to say that. And so it's hard sometimes to wrap our mind around how simple it is, because we got to get past these words like life insurance. Right. We got to get past these words, commissions, insurance agents. And, but anyway, so you heard something along those lines resonated with you talking about purchasings.
Yep. And that really resonated with me. And I started thinking, wait a minute, can't you, I kind of mentioned this earlier when I was yakking. Okay, you can actually pick out items that are ordinary expenses to you. It's not an investment. It doesn't necessarily, that, but you can get 6 months worth of what you pay for your cell phone. You get 6 months worth of what you pay for your cable, right? Because we got to have awesome stuff now. Before it was just like some basic package. Now we got to have everything.
Parkinson's law right there, right? A luxury once enjoyed becomes a necessity.
Yeah. I'm still finding crap on there now. And my son says, yeah, that's always been there. You didn't know that was there? No. Yeah. And he makes fun of me and never goes away. But, he's right. Okay. All right. So you pay your cable. And you pay 6 months worth of your car insurance, and you're laughably tiny amounts for stuff that your house used to be thousands. Now it's, is just the car insurance and a little bit of renter's insurance, right? So stuff like that. We got full coverage on both cars. We're looking at like 250-ish, and then cable-wise, we're looking at 150-ish. Well, that's 400.
Yeah.
Wait a minute, about 100 a month, all right, for cell phone, 500 a month. You take out a loan for 6 times 5, $3,000, all right? You prepay all those items, all right? And then for the 6 months when you don't have that payment to make, you make a payment in the amount of $500 back to your policy. Most people would just go, well, what does that do? Well, each time you make a payment on that policy loan, you're recovering your daily expenses. At the end of 6 months, you got the money back.
Do you do that? Yeah. Do you do that with your policies?
Okay. And now we're looking at the idea. All right. Well, dang. We could put 6 months worth of our rent in a custodial account, and then for the next 6 months pay a payment back to the policy. Right? You're recovering your rent.
Does your does your landlord, would they give you a discount if you paid annually?
That would be nice. But no, we're in a really nice place. So if there's a potential discount for something, you go ahead and pay it in full. Like, for instance, I had a couple of odd bills here and there for medical, a couple of specialists. And my wife, her instinct is always to say, hey, can I, if I pay the whole thing, can I get less or pay less? It's like her instinct. And she does that every time and will always ask that question, before bills are paid. So she kind of like having your backup there.
I'm the same way. I like to Gentile them down. You know what I mean? I'm not a Gentile. I'm a Hebrew, but I like to Hebrew them down if I can. I don't want to be cheap, but I don't want to. I want to get value.
Yeah, but cheap is not always the best. Sometimes the best is the overall when you're thinking about the value of what you're getting.
Sure.
And if you get to recover huge chunks of your living expense, and you can keep your easy position as a armed security guard at a bakery, that's the best.
So look, you were first exposed to the idea at a survivalist convention or prepared.
Right. That was when I first saw you, and that's when I realized that it was a way of getting your money out of the mainstream, and not leaving yourself subject to everybody else's whim.
All right. So that was a self-preparedness expo.
Right.
And do you know when that was? Do you remember when that was? Was that?
I'm pretty sure that was 2014.
2014. Okay.
I believe it was.
All right. And then did you purchase Nelson's book at that event or?
Yes, I did right then and there, and read through it over and over again. And there was some other stuff, things on YouTube with Nelson Nash in it,
right?
Too.
Which was very limited compared to today, what was available on YouTube. All right, so that would be a self-reliance expo. We did many of those. Yes. Okay, and then so you bought Nelson's book and you were online, and then you went to real estate expo.
It was a real estate expo. You were one of the featured speakers.
Okay, when was that?
Dallas.
So we had already met then. We'd already met, or at least because
at each step there was always something new that occurred to me.
Sure, absolutely. And was that in 2015? Did you say the real estate expo in Dallas?
I'm thinking it was in that time range. Sure.
Okay,
and,
so
each time it was a little different. We did I went to the meeting center there in Fort Worth a couple of times, and I noticed the crowds were getting a little bigger and they were a little more plugged in, and it felt a little bit less sideshow, because there's just too many things. If the public doesn't support something, it doesn't matter what you do. If it's because the public follows trends.
Yeah.
And, so I felt that the idea had caught on by that time.
Well, it was catching on with you if you showed up to the third event, right?
Oh, yeah.
The crowds were getting bigger. That's good to know. Good. And so when did you decide in relation to the events, 2014, the self-reliance, 2015, the real estate, and then something else in Fort Worth? Was that just like an event we were holding, or do you remember what that was?
Yeah, that was an event being held by you guys.
Okay. Was Nelson at that one, or do you remember?
He was at one of them.
Okay, well, good. He never, to my knowledge, went to a self-reliance expo or a real estate expo.
No. I did not see him there.
Okay, so he must have been.
It was just you. You inspired me.
Perfect. There's a sideshow.
Just by the fact that, hey, that guy doesn't look like a weirdo.
Right. Thank you.
Was a guy. You remember the guy not far from there who had a camo on his face and stuff?
No.
Well, okay. I'm just saying you struck me as normal compared to him.
That's probably why I hang out at those places, so I can look normal, huh?
Yes, you could look normal.
Right. Okay, so obviously you became a client in like 2015 because I looked before I hopped on. Did you hear Nelson before you became a client or after, or do you remember?
Once, yes, I heard him once. It was at the event at Fort Worth.
Okay.
That was my first introduction to Nelson in person.
Right. So you're a slow learner like me, Colin. You had to listen 3 times, right?
Yeah, how many times did I have to read the book, though? I went through it 4 or 5 times before I first saw Nelson.
I really am a slow learner. When I first read Nelson's book, I couldn't believe it, and I took the first opportunity a few weeks later to hear him speak, and I had the privilege of hearing him well over 30 times. I mean, we had the privilege of hosting him many times. And I'm saying that to say this, that people today, I mean, they'll read Nelson's book, and I know there's a lot of things on the internet, you know, that they can go and listen to. And God bless them, you know, they read Nelson's book 1 or 2 times, they listen to a few videos or what have you, and they decide, oh, this is really good, I want to do this. Where it took me, I mean, I flew home from the first time I heard Nelson and rearranged all of our life insurance. But I had to hear and rehear and hear again, because just like you, every time I heard Nelson, I would hear something else, something new, something I didn't catch or hear previously. And I'm saying that to say this, that, you know, if I didn't have the opportunity to hear Nelson that many times, I don't know if I would be, you know, paying the premium that we pay. I don't know if we'd be operating at the level that we're operating. You know what I mean?
Right.
So
yeah.
I think the people that hear Nelson maybe on his recorded, you know, 6.5-hour seminar or a few videos and read his book, I think they're just generally sharper than I am. They're just not as slow of a learner as I am, is what I'm saying.
Right.
So
again, here's the other thing. There's just so much. There are so many things that mentally block you. Like, why would I pay more premiums if I could just pay less premium? You know, stuff like that. That's kind of like saying, what if I only put $5 away every month? You know, compared to $500. You know, if you look at it that way, why are you jazzed about taking the second-rate crappy version? You know, the one that expires. I mean, they're already telling you ahead of time it's going to expire on you.
You better die before this term runs out, or nothing's going to happen.
Yes.
Right.
Yeah, it's just so dumb. But, you know, there'd always been, you know, I Uber, you know, right?
Okay.
And while I Uber, you know, sometimes that drive all the way out to Bush Airport is boring as hell, you know. And, you know, I'm chatty. I like to find out what people do for a living and all that kind of stuff. Here's something you just don't know. Houston is chock full of Nigerians. And every time you have a Nigerian, you could kind of thumbnail the idea of how you can recover the cost of bills that you're paying, right? And they always get it.
Really?
Do you know who doesn't get it? People with bachelor's degrees in
finance.
You know?
Economics, yeah, of course.
Yes. You talk to any Nigerian, he will say, well, I have 2 businesses and a full-time student or something. And they weren't joking, because they kept adding locations after location. One guy I was with for like 7 hours. All right, well, I'm getting paid for the whole thing, so I might as well just go home after dropping him off. There was no reason. They Uber, and they are Uber drivers. They're passengers. Same, you know. I give the car to my cousin. He works at night. Oh, wow. So their cars are never idle. They're always in school. They're always work. You know, just the energy is like amazing. You know, and but you see, the thing is, their minds understand. You know, but it seems like the more educated people are. I mean, you know, like, you got a master's degree in something, you're a doofus. You know what you say? I mean, I met guys who install drywall, and everybody thinks they're dumb. They're not dumb.
No.
And this is just the thing that people misjudge. You know, is just they're misjudging the value of whole life insurance. And you can't talk them out of it. You can't talk them out of it.
Right. Well, do you think that obviously you had some kind of interest, at age 22? I mean, you're either, however that happened, you were interested in learning, purchasing whole life insurance, and then the gurus, the financial people talked you out of it. So whenever you hear, this idea of becoming your own banker, and you hear Nelson and heard me talk a couple of times, and we're talking about life insurance and dividend paying whole life insurance, you surely had to reach back in your memory back to when you were 22 and said, oh my gosh, I knew it was good, but I didn't know how good it was, and I let people talk me out of it.
Yep. And it was easy to, because that was the era when life insurance agents were trying to sell investments, or investment people were trying to sell life insurance. There was that period of time when they kind of merged together. Yeah,
when was that, in the 80s?
Early 80s.
Yeah, so, and they still suffer, the industry suffers from that today. The life insurance companies want to be all things to all people. They want to be financial, providers they want to be all things to all people. You know what I mean?
Yes.
Financial services and all of this and all of that.
And the stockbroker people were as happy as anybody to sell life insurance as an investment.
Sure, universal life. That's where that came from. Yeah, that's exactly.
It had to be sexy, and regular life insurance just was too.
They came out with terms now. See, I was licensed permanently. I worked on a temporary license for 2 different periods, but 1991 is when I became permanently licensed, right? And I remember back in the day, they were coming up with these things, quote unquote, investment grade life insurance, and it was always universal life. And they were trying to put the connotation that investment grade is better than whatever you have, right? This is new investment grade life insurance. And so, the life insurance industry, and I've said it many times, they have forgotten their history. They have forgotten their heritage. They have forgotten who they are and what they have and why it matters, right? And then along comes somebody like Nelson Nash, and I'm not saying he's the only guy, but he is the only guy that put scale to becoming your own banker and borrowing against the cash values. But I'm with you. So at that time, all the investment guys they're just selling anything that they can get paid on, my opinion.
There you go.
All right. So you could get past the word life insurance, obviously. And after you heard several presentations, several readings of Nelson's book, and then you hear Nelson, you obviously took action. You decided that, I want to do this. I want to become my own banker.
Yep.
And you weren't 22 anymore, though. Colin?
No, I was not. And as a result, I did have type 2 diabetes and obesity and stuff like that. Me and the wife, we did not qualify.
So you applied?
For the insurance. However,
isn't
that a very nice coinky dinky that you can insure your kids and have them inherit the policy and become the owner?
Yeah, and let me say that there are a lot of rules that have to be followed to purchase insurance on someone else. There has to be an insurable interest, and just because you have children or parents or cousins or nephews doesn't mean you automatically have insurable interest. But in y'all's case, we got it done legitimately. You didn't qualify, but your children did. And Nelson has I think it's really only one page in his book, Becoming Your Own Banker. What if I'm uninsurable? Right?
Right. I remember that subject matter was not, it wasn't big.
Right.
Yeah.
So
there are some nice features to that, though. I mean, And if you delve deeply into stuff like, estate planning and all the other kind of stuff, there are nice features to that.
Yeah, I think, if I can, and I don't want to share anything that you don't want, and I'm not going to, but we did use your children, right?
Yes.
To get policies in force.
Yep.
And I got to say that, here we are, we're in 2020, the current estate tax levels are what they are. They're automatically going to revert at the end of 2024 because of the sunset provision in the last tax overhaul. And what's new with that, right? The estate tax limits and exemptions and amounts change on a regular basis, but there's a whole cottage industry built up on estate planning, right? And then there's new products that come out throughout the years in the 80s and 90s, the second to die universal life policies and all of these different and various creations from the insurance industry and the financial world. They may solve a problem. They may appear to solve a problem at a particular time, but as things change, they may not continue to solve the problems. And I'm saying that to say this, that because you bring up a very legitimate and valid point, that there are some very cool things that you can do when it comes to estate planning, legacy planning, generational wealth transfer. And y'all are doing that by default, right?
Exactly.
Right.
I do it the weasel way.
Well, I don't. That's your words, not mine. Okay, but.
Oh no! I know that sounds bad.
Right, but what I'm saying is, we might not solve every estate tax issue or problem, but we are not going to complicate it or compound it by any means. Right. We are going to mitigate, reduce, or eliminate an awful lot of estate tax issues. And so, thanks for letting me share that. So that would be in 2015 that you became a client. You started becoming your own banker. So it took a couple of years, at least a good solid year, right, for you to wrap your mind around it, going to different events and reading different things.
That's right. I did experiment along the way too, like just to know that the
true confessions here,
that the money could be borrowed. I did a little experiment. I took a small loan out to buy a garage door opener.
All right.
I know that sounds weird. Our house was the crappiest house with the nicest garage door opener ever.
Oh my gosh.
People would walk by and they'd go, ew. Oh, wow, look at that garage door opener. What was it, titanium or something? I don't know. It was nice, really nice. But I went all out and, paid the payments, got the money recovered. So,
look, were you penciling the loan and the interest and the dividend? Were you penciling the insurance company to make sure they were going to do or did what you expected them to do? Or
well, no, I just wanted to get through it to make sure I knew how to.
Okay.
Take out a loan and all that, and it was way more convenient than I thought it would be because I automatically assumed it'd be like borrowing money from a third party.
Oh my gosh!
And none of that happened at all.
It's like one page.
It made it so nice.
I'm telling you, one page, two signatures if you're in a community property state.
Right.
And it's like it's almost. I mean, it's not a loan request. It's not a loan application.
Right.
I mean, it's typically with most insurance companies, it's a multi-purpose service form, and you're telling them how much you want and how you want it delivered. Check, overnight, direct deposit.
And then after the experimental, garage door opener loan, right, which set the standard.
So the whole block started buying nice garage door openers, huh?
No, for some reason I just didn't want to tell them about it. It's just I'm just awesome. That's why,
I got it.
Anyway, so we did a couple of loans on fixing the house up. You know what happens when a storm goes by and the wood on the side of your house starts melting like a wet graham cracker?
No.
Yeah, we had to replace all the siding. We got a hardy plank siding. And man, I hit my head on it. That stuff is hard.
That's anyway, concrete.
Yeah. Dang, good. So we did some home improvements involving hardy plank and things like that. And the loan had not been paid off at the time we sold the house. And ooh, look at that. We got our money back now. Yeah. So, you didn't owe that money to a third party, and it was just some kind of it just felt like victory. Right. We're getting our own money back. Right back.
Well, you mentioned it earlier, whomever is controlling the banking function is winning and they're profiting. And if you're controlling your money and your cash flows, just the mere fact that you're in control of your money and your cash flows, what is that worth?
Everything. It's worth everything.
Mentally, plus, physically.
Plus add this in there. Whatever you do is nobody else's business. You don't feel like you gotta have the whole world has to know. So, damn, it's just pretty cool.
Yep. All right, so what else have you done?
And it's only going straight up from there, too. You pay the premiums, the premium goes in. Oh, my God. Well,
now that you mentioned that, you got to pay a premium. No way. Okay. But then when you borrow money, you create a loan repayment, too. People have a hard time sometimes wrapping their mind around that. I've got to pay a premium and a loan repayment.
Exactly. Yeah, they can't accept it. They just can't accept it.
The insurance company's going to charge me money to borrow or charge me interest to borrow my own money.
Right.
All that stuff.
One time one of the passengers asked me, I knew he had gone to college. I'm sure he was a art history major or something. And he could not get past his head that, no, you see, when I paid the payment, the money's coming back to me. And he just, well, no, because you borrowed the money. See, if you borrowed the money, then you're only at break even. And see, if you charge yourself interest there and this and that there, wouldn't you have more money if you, there's it's just something wrong with the whole college thing. You know how you should, if you can't get them to be smarter going in, you should have some kind of like real walking over hot coals kind of thing to get in. Something. You have to get pepper sprayed good or something. You're a wuss. Never mind. Go away. You got to at least get somebody motivated.
Little communist factories now, aren't they? Aren't they just promoting socialism? And
I don't know. I don't get the fascination. Well, everybody should be forced in the same little corner of that everyone else is at. Why are you doing that?
Yeah, everybody should graduate with $50,000 or $100,000 in student loans.
Yeah,
sure.
See, that tells me you're kind of dumb right off the bat because you're going to borrow so much money that you're not going to get back.
Well, listen, you can defer it. You can defer it for 20 years and then write it off and have a big old tax bill in the 21st year.
Yay!
That's the solution to these,
Well, you could have just got a policy loan out, See, that's kind of the reason why, you insure your kids. It skips a generation. That money pays for like the grandkids' college or something.
Let's talk about that for a minute too, because we hear all the time. I hear often, right? Well, am I too old? Is 70 too old? Is 75 too old? Is 76 or whatever? Am I too old? Heck, we even get that question from people in their 50s. And the short answer is no, you're not too old, right? Unless you're above age 85, then it's hard to get insurance issued.
Yeah, that would be hard to justify. Yeah, I get it.
But if you look at an even distribution of age classes in Nelson's book, and I believe it's on page 70 and 71, right? Nelson uses 4 different generations, right? And it's the older generation that has all the money, right? It's the grandparents that have all the money. And so and I don't want to make too many assumptions, but I think it's safe if you're a grandparent, or a lot of people in their 70s are grandparents. Okay, so I just want to look at that. Age 70, I'm a grandparent. Am I too old? The short answer is no. But are you insurable? And yes or no, you may be or may not be. It doesn't matter if you're insurable or not, in my opinion, because if you consider what's going on in an even distribution of age classes, if I'm 70 and I want to implement the infinite banking concept, if I'm insurable, I can start on my own life. Right, but that is a death benefit focus. You're still going to have cash value, but you're not going to have the same cash value in 5 years as you were if you were 20, 30, 40, or 50. All right, does that mean it's a deal breaker? Does that mean it's an end-all, be-all? No. If you start at age 70 and you're insurable and you start on your own life, you're just starting, you're kick-starting, you're accelerating the legacy, the foundation of building, the infinite banking concept through more than one generation. Because look, we're all going to graduate. Nobody's going to get out of here alive. I think there's only been 3 previously, and you're not going to be the 4th, and neither am I. Okay? All right. So, if you're insurable, you can start on your life. You don't have to finance a single thing, right? But then you can also potentially purchase policies on your children, or at least lead the way, show them how to do it. And you can look at your grandchildren, right? So you can lay the foundation if you're insurable or if you're not insurable, as long as you have insurable interest in others. Either way is okay. And so I'm sharing that sometimes when we're older, we just think, well, it doesn't apply to me, or I can't do it exactly like I've seen some example in the past. That doesn't mean you can't deliver, legitimate, real, life-changing results to your prodigy.
There you go. Now, once you have them set up on the kids, you can use it as a way to get the kids introduced.
What? You mean your children, like my children, may be interested in money? Right. What?
All right, I'm not going to say this really loud. My son is over in the other room. But, okay. All right, he may need a car soon. Get a car loan through the policy. Show him how it works when we do it. Have him make a payment to us, right?
Yeah.
The exact amount that the loan payment would have been. See, right there. Your kids will always think you're a dummy. That's sad, They have to see it work. Sure. For it to be a good idea.
Well, I appreciate the automobile example. You're just not going to go far unless you live in New York City. And last I looked at New York City, people are leaving by the droves. So unless you're in New York City, you're probably going to need a car, right? Okay. So you bring up the car, and I hear often it's like, well, James, I can go get a brand new car financed at 2.9 or 0 or 1.5 or 1.6 or whatever. And I'm like, man, that's great. Most policy loans are 4.76 all the way up to 8%, depending on the company. And at the end of the day, I don't care. So why, James, wouldn't I use, the third-party lender's money at 2.9 versus borrowing from the life insurance company at 5? And at the end of the day, that's just straight math. 2.9 is a smaller number than 5.0. No kidding. Okay, well, why might I consider that? Well, maybe I don't want to jump through the banker's hoops. But if I'm willing to jump through the banker's hoops, I'll use all their money that they'll lend me. at 2.9%. You know what I'm saying? So it's my choice is my point. It's who's controlling the banking function. All right. And then I might say, when's the last time you've had a pre-owned car offered to you at 0 or 2.9 or 3 or 4 or 5% interest? Never. It ain't going to happen. Here we are in the lowest interest rate environment ever. You're not
normal.
Yeah.
It ain't normal.
And then what's it? Your children need cars. My children need cars. And if the bank, the third party lender bank is going to charge 5, 6, or 7 for a pre-owned car, and my company, the life insurance company charges 5, and if I charge my children 7, let's say, that additional 2% goes into a policy that I own, and in your case, it's on the children's lives.
Yes.
That's just additional premium to the life insurance company. So, right, we're calling it additional interest in our arrangement based on the market rate of interest by the third-party lender. Okay. But that additional money into your life insurance policy creates greater cash values immediately, a greater dividend immediately, and greater dividends in the future forever. I mean, so my point is, if your son listens to you and pays attention to you, and I hope he does, and he repays the loans on the terms that y'all have created, he's just creating more money for himself in the future because you are going to graduate, and that policy is automatically going to transfer in ownership to him.
Right.
And it's going to have more money in it.
My approach is also, because it was like my hook, the thing that hooked me, right?
the brute force. It sounds like brute force, man. Okay.
You're recovering all the principal payments.
What?
And you're putting it right back in your own account. Right?
Yeah, I call it the equivalent. You're recovering the equivalent cost of the car.
Right. So I can show him that side as well. Right. This is the interest you earned, and look at this. This is the principal payments you recovered.
Wow, it's like, what's wrong with that? And nothing is wrong with that. And if you look at the last, I've done lots of calculations in the past, lots of different presentations, but the average all-American family winds up spending well over $1 million just for the privilege of driving a car throughout their lifetime. And the question always got down to how much of that, or if you could recover the equivalent, $1 million that you spend on cars for the privilege of driving, if you could recover some or all of that, would you want to? And, yeah.
Yeah.
And then, when would you want to start? Immediately. So I'm just saying, $1 million over a lifetime, that might not seem like a lot of money today, with these government, $1 trillion deficits, but that's a lot of money where I live. That's a lot of money. And I'm just, I say the family, I'm just talking about a married couple, or a couple, a partnership, whatever it is, 2 people. That didn't include your children and their spouses, or your grandchildren and their spouses. I mean, it's very, very powerful whenever you look at this concept over a lifetime and over more than one lifetime. But then most people can't think past next week too, I got to say. And so if we look at, let's say, how old is your son, ballpark figure that we're talking about here?
Oh, my son's car?
No, your son. How old is your son?
How old?
Yeah. Can I ask? Well, it doesn't matter. It doesn't even matter. Okay, let's say that your son's 30 years of age. I don't know how old he is.
He's 30, but he doesn't want to be reminded he's getting that old.
Okay, he's a young man. And my point is this, is like, let's, and I don't want to make you graduate early or anything, but let's say you graduate 30 years from now. Your son is 60, right? And he's got all this money coming to him, and everything that you've created and didn't spend and give away is going to accrue to your people, right? Okay, and he's your people. So my point is this, like, the further out you go and the further out that you look at these various life insurance illustrations and the examples of what can be done, the further out you go, the better it looks, no question. And I understand that people can't hardly think past next week, but just because you're not going to be here in 40 or 50 years doesn't mean your children won't be here in 40 or 50 years. And it surely doesn't mean your grandchildren won't be here in 40 or 50 years. So this idea that we can't think past retirement is ridiculous, right? If you're really going to change you and your family's financial situation, right, on a legitimate and potentially a permanent level, then if you don't take action, if you don't do something right now, how long do you want to wait? How long do you want to kick the can down the road? At what generation do you want to put the onus on? Well, I'm not going to do anything today. I'm going to let them worry about it, and so you fix it. I mean, it's ridiculous. It's almost the same as deferring taxes, right? I'm going to do a 1031 exchange in real estate because I don't want to pay any taxes. I'm going to do a 1035 exchange on all my annuities or all my life insurance contracts, or I'm going to buy a qualified plan to defer the taxes. Who, pray tell, are you piling up all of those future obligations and liabilities onto? Your people. And for the life of me, that does not make sense to me.
Oh, yeah.
I mean, the people
I am from California, and my dad passed away back in 2016. Mm-hmm. What a mess. And we had taken all kinds of steps. We'd gotten a trust set up and everything, put the house in the trust, all the other kind of things. So, and it still wasn't good enough. The state was just going to keep coming after you as long as there's liquid cash anywhere. I mean, it was, God.
Look, they're Illinois. I have a lot of clients in Illinois, and all across the country, but Illinois has implemented a couple of years ago an exit tax. If you leave, they're going to tax you for leaving. New York is putting it together if they have not already, and California, by golly, is going to do it very quickly if they haven't already done it. I mean, it's not going to change. The state does not have the ability to restrain itself, right? And they do not create one product or service. They don't provide anything for a profit. They do not make a profit. They cannot make a profit. And they cannot control their spending. So in their ever increasing expansion, all of the cost to expansion accrues to us. And no matter what you do, just like you said with your father, I'm sorry for your loss, all of the work and all of the estate planning that you've done, all the lawyers got paid, right? All the financial gurus got paid, the state gets paid, and it's brutal on the all-American individual. So there's a reason not to put it off, right? Planning for later. There's a reason not to put it off. Definitely. I say, and that's another great point, Colin. I like to use the exponential curve. If you start to the left, it's low, and the further you go to the right, it becomes vertical, the exponential curve, right? Yep. So if I delay starting anything beneficial, especially the infinite banking concept, and there is a startup cost, you're probably still in the startup cost. We'll get to that in a minute. All right. There's a startup cost. There's a loss of liquidity when I start paying premium. When I create policies that didn't exist before and I start paying premium, there's a cash value, but that cash value and total cash value and total premium don't equal till sometime in the future. So that's a loss of liquidity, right? All right. Yep. But the further out I go in my exponential curve, the further out to the right I go, that line becomes vertical. And my point is this. More efficient. Yep. Yes. The longer it exists, the more efficient the policy becomes. So if I delay because I'm trying to avoid the startup cost, I can't avoid the startup cost. So the longer I delay, what I'm really sacrificing is the exponential curve, the most profitable part of a life insurance, the most efficient segment of a life insurance policy. Does that make sense? I should come up with a graph. I have graphics to do that.
Makes sense. And even if, say, you get that policy later in life, your kids are the insured, and they will be the owners at some point. Probably, you still want to get that money in and finance that thing and get it capitalized early. I mean, don't wait till your kid's 40. Just, and because that exponential curve is going to be that much more effective if you started a little earlier.
Yeah, you're just going to experience it sooner.
It was a good place to put money, even for our age, and we plan to retire in 5 years or whatever. But it was still a good place to put money now, and there's no reason to even worry. It's just awesome.
Well, has it? Thank you for saying that, because that's legitimately been your experience. And really, of your experience, I mean, looking back, would you do anything different? Are you sorry that you've made any decisions as you made when it comes to the infinite banking concept? Is it, are the results what you expected, better than, less than, They are what I expected. Look, because, older, wiser, more realistic. When you're 22, and you're being told about something that seems boring and complicated, and interest rates were really high at the time, and you got stockbroker types talking to you about double-digit returns. Oh yeah, I remember at one time I had a money market fund that was paying 13%. Right.
Well, look at this, 13%. Look at how many. You can watch them month after month, and it was a perfect setup for dorks, who didn't want to study or learn or anything. And it is too bad that had I started a policy. But remember, I didn't have the background information. There was no Nelson Nash that I'd heard of.
Right.
That's kind of when he got his start, during that kind of crisis there, when it was high interest rates, unable to borrow, and things like that. And so he kind of started out around that time to come up with the concept, right? And that was his period.
Yeah, it was 1980. He was doing quad bypass. Yep.
Too bad I couldn't have known him then,
Yeah, me too.
And then, he could have set me straight.
Right.
Yeah. But I like when I'm driving and telling people about, about Nelson Nash. I still hand out your business card, by the way.
Oh, thank you very much.
Yeah.
I mean, going back to 2015, I mean, I almost, I don't know how many you made the effort. You drove up here. You drove up here from Houston to go to those two different expos. You drove up here every time you came up here to see Nelson. Yep. I think we had an open mic session one time here in the office that we're in Alvarado. I mean, you made the effort, to drive up here. You had to spend the night and all these things, 2 days. And, that was, any regrets on that at all?
No. Each trip ended with picking something up, right? Mm-hmm. But I also did the scenic route on the way back. Like, sure. You get off the main highway, cut across, drive through a weird-looking deserted town.
Yeah.
Thinking, wow, was there a bomb blast here or something?
Find the best hamburger joint in town, right?
Yes. And that's where I knew Buc-ee's. There was a Buc-ee's in Madisonville. And you don't pass Buc-ee's. Buc-ee's is just the Disney World of gas stations.
Yeah, I have friends like you that can't drive past the Buc-ee's. I can drive right by them.
Beaver nuggets? Come on. You just going to pass beaver nuggets? I don't think so.
I hear you. Well, too, this it comes to my mind that you have some experience with Excel spreadsheets.
Yep.
And I know that, I don't know to what extent, but I think pretty extensively. Haven't you, ran your policy cash values?
Yes, over and over again, like a weirdo.
Yeah.
Like a weirdo. Kind of an obsessive weirdo, too, because, I'd make a spreadsheet, it's perfect, but, it's not perfect, then I got to change something. So, I like to put together a calculator that would just kind of indicate to you what kind of payback period and how that affects the balance and all the other kind of stuff like that. I make these calculators from time to time. They're fun, but but it's what I do while I'm thinking. Like there's way too many people. Their thing is just basic calculator. You have to show this, and this. No, I'm trying to get for myself the way it stands, and then you put in a graphic in there, and that kind of thing. But it's my deal.
There's a lot of that out there. There's a lot of people just like you that's weird and like to get crazy with the numbers. There's nothing wrong with that.
It's really hard to illustrate the concept on paper that you just go, here it is, boom. And it tells somebody, and they look at it and they get it. Oh yeah, that's not that easy. It's hard to do because there are people, well, I don't get it. So, I'll send you calculators from time to time just for fun, just for giggles.
Yeah, and I look at them and I'm like, wow, that's a lot of good work, Colin. I'm like, right. I can't get lost in the numbers. I love numbers. Don't misunderstand me.
Yeah,
I'm not an Excel ninja, but I know some.
You have to pair it up with the exponential curve, right. The dollar amount. What's happening? Why is this worth it? Right. That's a little harder. Boy, I hear my wife stirring in there. She's just about done with her day.
Well, and we can wrap up too. So, I don't want to take all your time.
Because we got to start cooking around here. That's a major thing to watch.
Perfect. Do you use Excel spreadsheets on that?
Man. It's not horrible.
I get it. Is there anything you'd like to share? Any parting wisdom, encouragement, or things you learned you didn't expect?
I would say a motto I have, right? Comfort kills initiative.
Ooh. Comfort kills initiative. That's deep, dark, kind of go good on a bowling shirt or something, Right. But it is one of those things where, back in the day, I had a good job. I had good benefits. I was doing everything the world expected of me. I was happy with myself, and it killed any initiative I had. The 401k was a default. You're not thinking beyond your immediate reach, and so comfort kills initiative. That 401k, that's very good. Yeah. That 401k, I see a lot. It provides false comfort. It's false. Yeah. It's an illusion of comfort. Yeah. And 401ks have a way of, when you're no longer employed at that cool job and you find yourself with a house and a mortgage in Southern California, inland, in a recreational area that doesn't really have a job base, Palm Springs, Cathedral City, that area. You realize that your job is running your whole damn life. You got to chase a job. I told you earlier, I am a security guard, armed security guard at a bakery. I am not chasing any careers or anything like that.
You know what? What you make is irrelevant. It's what you keep. Right?
There you go. I agree with that.
There we go.
All right. Well, perfect. Listen, I appreciate you calling.
Okay.
Always have.
Yep.
So,
hey, if you're going to send this, go ahead and send it. And I'll forward it on to my wife so she can make fun of it.
yeah, I'm sure she'll be completely encouraging for you. You married up, that's for sure. All right, listen, have a great day. Thanks, Colin.
All right.
I appreciate
it.
You
too. Have a good one.
You too.
Bye.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.